Markets around the world are about to hit new all-time highs. We're talking the US stock markets. We are talking the real estate markets in the US, and it has happened already in Australia. It is unbelievable how much money is coming into the market, yet you know the deal. We keep hearing a lot of people talk about a collapse coming. Now, I don't think this is going to change anytime soon. I think we are going to continue hearing about why markets should continue to collapse, but where the money is going is doing something entirely different. The money is going into the markets. That's why these lines go up. If there was a collapse, they would be going down. But I understand that it's pretty hard to decipher, especially amongst all of the noise going on out there in the financial world, in the crypto world, wherever we're looking, real estate, doesn't matter. We just keep hearing that things should be going down. Now, that is getting less and less, but Bitcoin in this case is 150% away from the low. You guys who love trading your altcoins that are here for some of those massive gains, some of those altcoins have gone up hundreds of a percent. Trying to pick each of those out of the millions there, good luck. I'm very happy for you guys making the gains, but it's very unfortunate that the masses are waiting around for a lot of these markets to basically peak before they start buying. The other thing we're looking at is the US dollar collapsing. Now, overall here, what I want to get through is an update of the 20-year cycle, our 18.6-year cycle. So that's an average. If you haven't heard of it before, don't worry, we're going to continue getting into it here on the channel. But before I go any further, like and subscribe, please. And if you find value from the content, do share it with a friend. I saw that yesterday's video had a lot of love on it. So thank you very much, you guys that are saving the videos and then coming back to watch them, because I guess they're little educational pieces that you can come back and review at later stages so that you can improve your own trading and investing. So one thing that I found highly crazy is the amount of traps that have been set in the market leading into this 18-year cycle. Now, it's my second cycle that I can recall, but this one is the one I've been most involved with as an investor. The first cycle ended around the peaks here of 2006 for the real estate market and 2007 for the stock market. And then we had the collapse into 2009 and the real estate market continued to bottom around into 2011-12. So this current cycle is something that I have had far more exposure to compared to the last cycle, which I was in at the end, as I was in my early 20s, and now I'm in my, I want to say mid-30s, but getting into my late 30s here. The amount of traps that get set during the lows of the market is unbelievable. And this is just how easy it is for most people to miss out on the move to the upside. What I'm saying here is I think we've got a pretty good, sizable gains to be had to the upside, yet many have missed all of these bottoms. And October did seem like a bit of a trap. So today I want to go through a lot of these charts just to update us where we are in the overall cycle so that we can get a better perspective on where we're going next. And as I said, if you find value, do share it with friends so that they don't get caught out in the same nonsense as the majority of people do. One of the traps, what got me thinking about this, and like I said, I'm just having a bit more of an open discussion in this video so that we can really put it together in our own minds of how this happens. My video I did back in May looking at the old saying, sell in May, go away. Now, of course, that's over. It ended in October. You sell at 1st of May, buy back 31st of October or 1st of November. And that's supposed to keep you safe in the market. But I was looking at this being a potential trap for the markets, and in particular for BTC. May was around this red bar here, and here is your October bar, which was an absolute loss if you sold out. So that's just a simple saying that has basically lost people because they haven't been in the market during that period. But at the end of the day, it's not the biggest one. I think some of the bigger traps are things like this, where we're seeing the S&P 500 come down into some pretty big fear moves to the downside, a big trap at the bottom here where everyone thinks it's going to collapse even further. And then you just get this huge move to the upside, which then traps the bears thinking that they have just missed out. And some of the bulls also, who were waiting for a better buying opportunity because they were told it was going to go lower, they also miss out. And this market just skyrockets to the upside. That does not mean that we're going to completely skyrocket again in the following month. We did have 3 months down, lower highs, lower lows. Typically, you might see a little bit of a pause here rather than an entire collapse. but just keep that in mind as well, because you had one trap here, another trap to the upside because of how fast the move was. And then you start to have a bit of a reversal. So everyone that bought in late, they don't see their money go anywhere and they get a little bit stale and think nothing's going to happen. They get out. Then it's time for the market to move on from that point. So overall, looking at the cycle, this is part of this stage here in the middle here. Don't worry about the words for now. Commodity boom, huge infrastructure spending. That's happening around the world. The main thing is, as we come out of the lows, then you get a little bit more confusion in the market as to what's happening. Are we going up? Are we going down? Now, we've labeled many times here on the channel why we think the low is in. That's for the S&P, that's for Bitcoin, that's for real estate. And I guess I don't want to go around and round again. And with that, the main point of this video is to update the cycle and have a look at how the asset classes around the world are behaving in this stage of the cycle, because we've seen some pretty significant moves overnight, especially with the USD. So that one there was the trap, just as an example that we've seen in the past. As we go through this stage here, depression into disbelief, that is also a lot of traps being set. And by traps, I mean the masses think one thing's going to happen, then the opposite happens. That's basically a trap, because they don't have a picture or a plan as to how that could be the low, and the market is going up from that point, like we talk about often with the wall of worry. But once we break into that stage of pandemonium and mania, then you're really set up for failure if you've got into the market too late, especially in real estate if you got in too late, because then real estate is leveraged up. And that's pretty much the one asset that almost everyone uses leverage on, because you can borrow from the bank. As for crypto and stock markets, maybe you use leverage, maybe you don't. But this is probably one of the biggest ones here that everyone puts a lot of money into, and then it rolls over and they lose their money, which is why they're so fearful of buying something when they think the low is here, or when they think the market's going to continue to collapse. I just want to point that out. I don't think it's going to collapse just yet. I think we still have a significant run up, but eventually we will get that collapse. And the collapses typically start from the euphoria. Now, we haven't been in euphoria yet. We've been in the anger. We've been in depression. We've been in the disbelief move to the upside for the S&P 500. And we've had this pullback now. So I think there is a bit of disbelief. And then we start to move into that hope and optimism stage. And so that's when the scramble happens, because many can see where the market's come from. They want it to go back there so they can buy again, but this is just not going to happen. Just like back here, the market out of the COVID bottom kept going. They get a small pullback and they can see just how far it's come, and they want those prices again. But that was a huge higher low, and then the market took off from there. So I think that's happening again. I think that's happening for real estate. And we can see it with the data itself. The Case-Shiller home price just came out earlier, I think within the last 24 hours. It's been up for 8 straight months. That's 8 straight months of price gains. Now, you can go through and have a look at this in great detail. It'd probably be an hour video on its own where it goes through all the different cities in the US, and it shows you which ones had gains, and then obviously you put it into an average here for the entire home price index for the US. But essentially the real estate low was back in January 2023. We know that there was a lot of fear in 2022. Prices had a bit of a pullback, and they had to have a pullback after monstrous gains from the COVID low when when the Fed started printing a ton of money. And this was the only pullback. Now you might be, it's granted that you could say, well, this is a double top because the prices are exactly the same. The market hasn't shown yet what it wants to do. But remember, this is September's data. It comes out quite late in the US, probably like 2 months after the fact. But house prices are still going up, and we may even see a new all-time high earlier than in 2024. But we'll see the data come out in 2024. So we're still waiting on that. Most likely going to see another all-time high for the Case-Shiller home price index. As for Australia, we have new all-time highs in some cities throughout Australia. I know Brisbane has a new all-time high. So just quickly on this, I know not everyone is Australian, but you're seeing it around the world is essentially what I'm saying here. And we've got ridiculous median house prices here. for Australia's combined capital cities now, $900,000. And for units, which you guys would call condos or apartments, $647,000. So things are ramping up, and before you know it, it's going to be even higher, with everyone saying, I can't afford a property. And we know what happens from that point. The government comes in, the banks start creating more credit. It doesn't necessarily have to be the government printing money. That's what's happened many, many times before. So don't get too sidetracked on thinking that the government has to print money and that the government has to pull back interest rates. It's not the case at all. What is going on now with the rest of the world? Well, real estate, land is the basis of everything. That's a good signal then for commodities like Bitcoin, like the stock markets, like your assets there. Those things are also going up. What isn't going up is the US dollar. Post I did September 2022, looking at the boom, the peak, and then from that point, you guys can see that's where I did the tweet there. Market has collapsed. It was, I think, within 24 hours of that top, the news got absolutely wild for everyone going into the US dollar. The 50% failure on a macro scale here, you can see the big range fail, and we were looking at our target of 103 to the downside. We've now hit that target and exceeded it and continued to fall through that 103 level, now sitting at 102.5. What we expected and what I've pointed out before on the channel, which is often why I say subscribe so you can follow along for the journey of what actually goes on in the markets as opposed to what the headlines are saying and what these analysts and pro traders and pro investors that are telling us all sorts of things about the market having to collapse because of this data and that data. It's not actually happening when you look at the actual prices themselves. US dollar coming down, that's what is happening in the second half of the real estate cycle, which eases the prices and the pressure on the commodities. And that's going to be favorable for Bitcoin. It's going to be favorable for your beloved metals. If you're a gold bug, it's going to be favorable for real estate as well. Don't be sidetracked. I'm not a permabull. This collapse will happen. This collapse will come and destroy a lot of wealth in the market. And unfortunately, probably the young crowd, the young folks in their 20s and probably 30s who are getting into the real estate market for the first time, are probably going to get caught out at the peak and lose a lot of value, if not have to potentially file for bankruptcy. It's going to get that crazy, I think, in the second half of this decade. So after that sort of 2025, 2026 period. So to the downside, we need to change this target now. We're going to look for other significant lows here around 101.5, and then look towards the psychological number at 100 and the low that's come in here at 99. So I'll update that in future videos. But I wanted to give you an overall update here when it came to the cycle and of course Bitcoin itself. As we've been covering this on the channel, and it's important to keep up to date with this. Now I use this Gann swing indicator to advise me of where the swing tops and swing bottoms are, showing us a very quick trend. And I just wanted to let you guys know that there is a 7-day free trial on the Gann swing indicator now. There's also a suite of trading indicators that we have attached with this: Bitcoin dominance, total cryptocurrency market cap, where you can change the settings to remove Bitcoin, ETH, and stablecoins, and the crypto fear and greed index, which you can have on your charts as well. So if you want to check that out, it is a 7-day free trial, and this is your annual membership after that point. And to give you a rough idea of what other brands charge for this sort of service, you can be anywhere from $1,500 to $3,700, but you're probably going to be somewhere in amongst these levels here, $1,500 to $2,000. This is what it is, and you have it on your TradingView chart. This is some entirely different trading software itself. So if you want to check it out, 7-day free trial, link is in the top of the video description. That's what Michael and I use for all of our charts to identify the support and resistance levels, and it's really handy for trading as well, for where we want to enter trades or exit trades, along with our Gann 50% level as well. So as I said earlier, there is your trap. We had a nice big move up. We are only about 5% away from a new all-time high as well, 5.79%. As for the NASDAQ, we're even a little bit closer now, sitting somewhere around 4.3% from a new all-time high. And as I said here, I don't think these lows are going to get broken, which then sets another trap for those unsuspecting investors who are hoping and looking back at where those prices were. And it doesn't seem like we'll potentially get back to those. Let's wait and see. We've had 3 months down now, and then this one big move up. So we'll probably have to pause again in the next few months. So looking at this stage here, we're in November. So that's where we're at with the NASDAQ. We've looked at the S&P, we've looked at the US dollar, and we've looked at the real estate cycle. Commodities are also on the list, and we're seeing gold rise again, potentially looking at its highest close in history. Yes, you heard that right. This could be its highest close in history if it remains above the previous close here in April 2023 and also July 2023, above $2,000. We've got about a day and a half to go, and this could be its highest close in history. Just going down to the daily chart here, we've had a massive gap up here, and that's probably due to the US dollar falling. Silver's also had a pretty similar play out here, had a big jump up, and again, getting close to a pretty significant highest closing price for 2023. So you can see this is where we currently sit. It could take out the previous close in April and be one of the highest closes in 2023 for silver as well. It's basically just a higher beta play than gold. I'm neither a gold bug or a silver bug. It's just, if you're going to go for the gains, silver's going to have more gains, but it's also going to have bigger collapses. Either way, I don't really care for either, that the world is going to collapse and that everyone's going to need gold and silver. Moving on to our beloved Bitcoin. And we are now up 2 months. This is a green month, but it was a lower high and lower low. So we have 2 months of higher highs and higher lows. This is a really interesting point here. 148% from the low to the top. If we take a look at the previous cycle for the low, 12 months in to the top of that month, it was exactly 148% as well. So in amongst the big FOMO, the greed, and then the depression to the downside, there was a lot of depression through these 3 months here. Basically, the market is exactly where it was in the last cycle if we count forward those 12 months from the cycle low. Black Swan event, you know what I think about those. I'm not going to try and prepare for one. Maybe we get this move up again, which we are in the move up in November or October, November. Maybe we get it into December and then have a bit of a pullback. So if we didn't have the Black Swan, maybe this low would have held and we'd have some higher lows forming into the first half of the next year. So that's for BTC. You can see we're on a pretty steady track up here towards our 50% level at 42.5K. We've gone through the real estate cycle. Those things are on track. Everything is heading up. You can't have Bitcoin going up into new all-time highs without the real estate cycle also heading up, without the stock markets heading up, and just expect that you're going to see some sort of major collapse and Bitcoin's the only one that's going to survive and everything else goes down. It's a wild theory to believe, in my opinion, at this stage of the life of Bitcoin. Maybe in a couple of decades, at least a couple of decades. But even then, gold still does not respond that way that everyone thinks it does. Gold goes up with the cycle. Here is your bottom. 2001, 2002 was when the market was coming down. There's your 2003. What did the stock market do? The stock market went up into 2007. Gold kept going for a little bit and then had a pullback when everything else had a pullback as well during those few months. So you had a pretty good run after that bottom came in. So 2009, March 2009 right here, gold went on a solid run, but it only went from 900 to 1800. The stock market did much more than that. The stock market went in that period of 2009 to where it peaked. You still had about a doubling in the stock market as well. So not much more, but basically a doubling, 700 into around 1300. So holding gold didn't seem like that big of a deal. And I've covered 2 points there now. Doesn't seem like a great deal there for gold if you are in there at the low with the stock market. And in terms of how Bitcoin is supposed to respond, markets have got to go up for Bitcoin to have any sort of gain. So trying to hold two of those thoughts in the one mind is like being a vegan and thinking that you need to eat meat to be healthy. And in this case, you can't think Bitcoin's going to go up and the rest of the market is going to collapse either. Hopefully I made that one nice and clear. I'm hungry now. Going to go put some steaks on the barbecue. I hope you have a fantastic evening or morning wherever you are around the world. And I'll see you guys back here at the next video. Till then, take care and peace out.